Dow futures fall 100 points after Trump says no need to rush on China trade deal. Published 7 hours ago, updated moments ago.
CNBC.com.
Wall Street is set to open lower on Friday as President Donald Trump said there's absolutely no need to rush on a trade agreement with China. Futures on the Dow Jones Industrial Average fell 100 points, implying a lower open of about 98 points. The S&P 500 and Nasdaq were also set to open lower. Trump said in a Twitter post Friday morning he could stick with China tariffs for a long period of time. The comments came after he slapped higher tariffs, from 10% to 25%, on $200 billion worth of Chinese goods. The president later deleted the tweet that said no need to rush. White House did not immediately respond to CNBC's question about why Trump deleted that tweet. There's still hope that the U.S. and China could hatch a deal. Some market participants believe the new tariffs are not applied to Chinese exports that are already in transit before the deadline, which provides some additional time for the two sides to reach an agreement. Shares of Ford rallied more than 2% in pre-market Friday, providing some support for the market, after Bank of America Merrill Lynch upgraded the equity to buy from neutral, citing a strong utility vehicle and truck lineup over the next few years. Chinese Vice Premier Liu He met with top U.S. trade officials Thursday evening in Washington, just hours before the new tariffs were to go into effect. Liu is meeting with Trump's trade team without the title Special Envoy for President Xi Jinping, a role he has held in previous talks, suggesting he may have diminished authority to make concessions that could be key to striking a deal. Hours before the meeting Thursday, the president said tariffs are an excellent alternative to a trade deal with China. This hardline turn by the U.S. was certainly a nasty, if not an entirely unpredictable, surprise for markets, which now may have to contend with heightened trade tensions for longer than anticipated. Hannah Anderson, global market strategist at J.P. Morgan Asset Management, wrote in a note. Stocks extended this week's major sell-off on Thursday. The Dow Jones Industrial Average has fallen more than 650 points this week, while the S&P 500 has lost about 2.5% following the president's Sunday tweet threatening tariff hikes. On Monday, stocks shook off the president's weekend tweet as a mere negotiation tactic. But tougher rhetoric by top U.S. Trade Representative Robert Lighthizer weighed on major indexes. Markets again seesawed after the president said it was possible to get a trade deal with China this week. The Dow fell nearly 450 points at its intraday low on Thursday before cutting losses and ending the day just 138 points down. This episode highlights that trade tensions are not truly resolved until a deal is signed, sealed, and delivered. Meanwhile, the extent of the sell-off in the last few days is evidence that consensus market expectations can be wrong, especially when investors rely more on rumor than fact, Anderson said.